And we now turn our attention to the volatility in Indian stocks and the rupee's fall to a new record low against a burgeoning dollar, where the benchmark indices had surged to multiple record highs in the run-up to the budget. Traders had positioned for broader reforms in taxes. However, stocks and the rupee tanked on Tuesday after budget announcements, which included an increase in capital gains tax and new levy on derivatives trading. The rupee fell to 83.69 against the dollar, inching past the previous lifetime low of 83.6775 and compared with 83.6275 before the budget announcement. The currency has been weighed lower by a stronger dollar in the broad emerging market hit, while the Reserve Bank of India has intervened in markets to stem significant moves in the rupee. The currency has tested several record lows over the past month. The US Federal Reserve's decision to delay the start of its rate cut cycle has hurt global currencies, with the emerging markets taking a bigger hit. The blue chip Sensex index fell as much as 1,500 points at one point, but recovered during the last hour of trade to close around 80,400. The broader Nifty index also crashed after starting the day with gains. It came within the whisker of falling below the 24,000 marks point and closed at around 24,500. The likely reason for the investors giving the budget a thumbs up is the long-term stability expected due to lower fiscal deficit targets by the government. To give us his perspective on India's Union Budget 2024, we are now being joined by Dr. Krishnamurthy V. Subramanian, who is the Executive Director of the IMF, and he's joining us live from Washington, D.C. Welcome to the broadcast, Dr. Subramanian. I'd like to first know from you, what is the most important highlight, according to you, in India's Union Budget 2024?
A very good morning from Washington, D.C., and a very good evening to viewers. I think the first budget of the new government has several visionary steps. If you look at the reformulation of the tax code, the vision to be laid for the financial sector to support development, the incentives that have been given, in terms of credit guarantees, etc. But for me, I think the most important is the emphasis on employment creation. Possibly the first time that there's been such a slew of measures announced for employment creation. I have to give you a little bit of perspective here. Yes, there is need for employment creation. The economic survey talked about the need for 80 lakh jobs to be created in a year. But the context, and which is important to keep in mind, is that using high quality data, be it from the PLFS or from the CLEMS database, which is what the RBI report has used, shows that even leaving agriculture, about 8.9 crore jobs have been created over the last 10 years, which is about 89 lakh jobs. And that is important to keep in mind. Secondly, the 80 lakhs, while a lot of people are saying this is a large number, as a percentage of the overall workforce, it is only 1.3%. So I think this is the important thing to remember. If in the last 10 years, without as much emphasis on employment creation, about 89 lakh jobs have been created every year, I think with this slew of measures, employment creation can really be furthered. This is also, the measures that have been brought in are based on evidence of things that have worked in the past. If you would recall, the Atmanirbhar Bharat Rozgar Yojana had done very well. And, that had basically benefits being provided to employer and employees. Together with the internship program with top 500 firms, I think that will really help in skilling. The educational loans and the skilling loans, all these, I think, are very important. So for me, what stands out is the emphasis on job creation, because that can really lead to inclusive growth.
Dr. Subramanian, could you say that India's Budget 2024 can bolster the country's growing economic ambitions?
Absolutely. If we have to grow and become a developed economy, our aspiration should be to grow at 8%. We are already been growing at 7% at least post-COVID. And I think the emphasis that has been placed on employment creation, as I just mentioned, along with the ease of doing business, I think the proposal to reform the tax code, which is a 1961 relic, is a very important part. The abolition of angel tax will really help the entrepreneurial ecosystem. The provision which was there in the interim budget has been continued for about 1 lakh crore on innovation. I think these are all very long-term bets that have been made by the budget, which will really further growth.
You just spoke of a few positive points, a few positive key takeaways from the budget. What are some of the challenges and the focus points that the budget did not address?
I would like to think that many of the important areas have been covered. I think the emphasis on maybe giving more of a relief to the middle class, that is an area possibly where there could have been some more work. But I think there also, one has to look at the details, but based on the finance minister's speech, about 17,500 is not a small amount, but I think that's an area where overall, not just in this budget, but all through, there has to be, more work to be done.
Right. Well, the finance minister aims to lower the country's fiscal deficit to below 4.5% of GDP by 25-26. The government has set a target of 4.9% for 24-25, down from the previous 5.1%. Now, India is an emerging market. With that in mind, your thoughts on India's focus on bringing down the country's fiscal deficit?
So I think that's, of course, a good measure to keep the fiscal deficit under control. But I will also mention many times when we talk about the fiscal deficit, we do not take into account the nature of spending. It is important to keep in mind that if the nature of spending is in those that are growth enhancing, then that leads to the debt to GDP ratio going down for the country, despite the fiscal deficit, being, let's say, 4.9%, because when the growth in nominal terms is higher than the cost of borrowing in nominal terms, that leads to the debt to GDP ratio declining. So overall, definitely what has been done is, I think, very good, because do keep in mind the tax buoyancy and overall the net tax has been increasing significantly as well. The economic survey mentioned that about 19% increase this year in net tax, and that's really helping in the fiscal deficit target as well. But overall, I think this is a very fiscally responsible budget, but at the same time one that really delivers the vision of a Vikasit Bharat by 2047.
Dr. Subramanian, I thank you very much for joining us on the broadcast with your thoughts. For all the latest news, download the WION app and subscribe to our YouTube channel.